turned in. Everybody needs it. Well, the best part about information, and really good information that most people don't know, is that it's rejection free. I'm not selling anything. I just learned something. I just learned the power of a home business. I just learned that I was losing money. Hey, are you interested in maybe how much you might be losing? Hey, did I sell you anything right there? No. I just learned information, and I'm so excited to share some great information with you. Whether you buy, do anything with it is really up to you. But I just thought it's my duty to share it with you. It'd be like having a burglar in your neighborhood. So you're living in a cul-de-sac. You've got a convicted burglar that lives right next door. Would you share that with all of your neighbors, or would you be like, oh, you know what, I don't think they'd be too worried about it? No, you'd share it with all of them. And so we want to make sure that we get you in that right mindset, that information shifts the power from the buyer to the seller, right? So think about it. So like in real estate, who had the power? The real estate or the buyer? The buyer always does, right? Because they have the money. You're trying to convince them why they should part with their money and buy what you have. So the great part about great information is that it shifts the power from the buyer to the seller. It shifts it to you. Because the perfect example is if somebody was going to go into bankruptcy or a foreclosure, and you had a guaranteed way to eliminate foreclosure and to keep a little extra money, who has the power? You do. And so we want to arm you with that power tonight. All right, so one of the key things is when you read any of the books, the Kiyosaki's, the Trump, the Millionaire Next Door, Millionaire's Mind, you'll always hear them talk about taxes. Because for most people, it's their biggest liability. Where for the rich, in many ways, it's their biggest asset. And it's also the biggest source of savings, immediate savings. It's all a savings account to tap into, and I'll let Tom and Rhonda kind of jump into that. But if you look at, many of them will always talk, you've got to reduce your tax liability to a legal minimum. So, perfect example to show you this is not trivial. If you take $1, you double it 19 times. $1, $2, $4, $8, 16. Or just 19 times it equals over $1 million. To take that same dollar, double it 19 times with taxes taken out, it equals a little over $21,000. Over $1 million, over $21,000. Okay, I cannot tell you, where do you ever learn this? I've ran multiple businesses, and until I met Tom and Rhonda, and they showed me this chart, I just went, oh my gosh. And they said there's two tax systems, one for the informed and one for the uninformed. And I went, holy crap, I'm a part of the uninformed, and I didn't even know it. You don't know what you don't know. Well, I'll tell you right now, how many people go to school to learn how to make money, but whoever teaches us how to, first of all, manage it, and then second of all, how to maximize it. That's why the rich keep getting richer. They know how to maximize money. Money makes money. If I keep more of my money, I invest it in me, I make me more money. See, this is something I want each of you to make sure you understand this. Because when somebody says, oh yeah, no, I'm fine. Yep, don't need a business. And you go, great, yeah, must be losing tons of money. What are you talking about, losing money? Well, I mean, you're W-2. I mean, you guys go to work, you get killed in taxes. You have no write-off, no business that throws some extra money on top of it. I mean, people just don't know. And so I'm really hitting on this hard because I want you guys to make sure you've got this information. Because I'll tell you right now, if you think of two ways to recruit and two ways to approach people, if I come at you and I say, hey, Bill, I've got this phenomenal opportunity. Hey, it's a great way, you're going to save some money, but it's electrical here. Hey, it's got your phone bill here. Okay, just remember, you're asking somebody to change. You're asking somebody to actually do something for you. And most people are lazy, but second of all, they're always skeptical. And so in the back of their mind, they instantly go an opportunity this and oh boy, okay, he's going to tell me something. They put up their guard. Oh, you know what? hey, struggling right now, don't have the money. Well, no, I'm here to save you. You know what, you have to buy it, don't need it. Have you ever felt that? Have you ever felt that pushback that immediately kind of box you in? Well, imagine saying, man, I got this new app on my phone. You gotta check this out. It shows you how much money you're losing by not having a home business. I mean, every person I said that to has gone, really? How much? What's it like? They're intrigued. It's like a new cool phone app. Or, hey, I didn't realize that Shelly and I were losing money each month. It's about $400 a month. Hey, are you interested in maybe how much you might be losing just for kicks? Okay, nobody likes to lose, but people struggle to buy, and nobody wants to be sold. All right, so I'm hitting on this big time because I want to make sure that you're in the right mindset. Because if you're picking and choosing who you think would be right for CCM, you're selling. It's like you don't have the power. I want to give you that power to just go out to everybody and go, hey guys, great information, just thought I'd share it with you. Have a great day. People love informational sources. They love good information. And especially when you show them something that affects them in their wallet and their lifestyle and their family, that's really something people get passionate about. All right, so let's jump out of here. Let's get right over into the expense tracker. Oh, looks like my session expired. All right, so the expense tracker. Computer's running a little slow here. Okay, so let's log in. So when everybody comes to their site, I think you guys actually auto log in right through your back office. Okay. All right, so what I want to do is I don't want to go through every little piece of the expense tracker. I just want to focus on a couple things because I want to then turn it right over to Tom Rhonda. So we talked about recruiting. All right, so in recruiting, this retention tab. So what we built this for is really a recruiting and / retention. Because many times when I was talking to Tom Rhonda, they talked about the quote green pillar. Somebody got into the business, they were a little unsure, did I make the right decision? Oh man, buyer's remorse. Am I going to make money? Things like that. Well, a smart decision. And again, all of this content is brought to you by Accountable Solutions. If you have any questions, call them. Or I'll give you their email them. They're here for you. They're here to answer your questions. They want to work with you. It isn't just a once a year event, that tax time. I mean, there's things during the month that you should be talking to them. And so they talked about why it's a smart decision to be in a home business. All you do is hold it down. And there you got Rhonda, and it's pretty safe, they come up and educate you on why it's a smart decision to be a part of a home-based business. Okay, you got lifeblood of the economy, you got how you increase your income, why the government gives you these types of benefits. And you've also got the tax savings estimate. Okay, you guys, if you're not using this and you haven't used it for yourself, you better go in and use it tonight and get familiar with it. Because this really is so powerful. Number one, on you. If you haven't done this and looked at, hey, I'm now a CCM broker, am I maximizing my business? So you come in here and say, you know what, my mortgage or rent, let's just call it $4,000 a month. What actually is that? It's all by year. Right? So about $20,000 per year. So business vehicles, how many miles do I drive per year on a vehicle? Let's just say around 15,000. Okay, let's say on vacations with hotel and airfare and hotel or parking, all of those things, what do I spend per year? Let's call it $4,000. Okay, going out to breakfast, lunch, dinner. What do you think you spend on eating out? Let's say $400 a month, that's around $4,800 a year. Say, my cell phone, my internet, let's say it's $200 a month, $400 a year. So I can immediately go down and look at what should my estimated tax savings be. And so there's a little shy of $6,000, which is a little shy of $500 per month, but I can start keeping back in my pocket that helps me grow this business. This isn't next year. This is taking that real raise from my 9-to-5 job, making sure that I keep a little bit more in my pocket because I'm out there working the business. I'm out there taking people to lunch. I'm out there driving around in a vehicle. All right, so I want to make sure that you guys have done this for yourself. But again, this is an amazing tool for recruiting of talking to other people. And I'm going to show you how we now brought it outside the expense tracker and we put it right on your phone, and to where you can do everything right on your phone, on the spot with somebody, and have it all built right with them. All right, we also talked about the CCM debit card. So again, you guys, all you need to do is go into your My Account right up here. And you just need to go right down here and activate the expense tracker debit card. Just click on the plus. And all you do is you put, you want that CCM, you want to check this for business. You enter your card number, your expiration, accept terms and save, and now that takes your CCM card and it will auto-populate when you swipe it. It automatically categorizes the expense for you, automatically logs the description, the address, timestamps it, and the amount, everything done. And the beautiful part about it is it's not with separate cards. It eliminates commingling. Just use this for your business. Okay, we also talk about the voice part of it. So in the business, if you're ever out and you want to use the voice part of it to kind of open up great door openers, you can go in, buy voice, just dial the 800 number right there on the front of the website, and say business nil. They'll ask you how much did you spend. Let's say $50. And say please leave a description. Who did you meet with? Why did you meet? Where did you meet? So I can log all of the details of a business meeting, and it's built all right within. And if I ever have any questions of what can I write off, or what can I or can I not, just go click on the category, and it will immediately bring up accountable solutions. And I'll tell you what, having this done to the webinar is definitely when you will get slow. So anytime you want to know that content, just pull it down. Click on the I agree, I've read the disclaimer. And again, you've got Tom and Rhonda right there that educates you on demand exactly what you can and cannot do on each of those different business sections, business categories. So I wanted to make sure that as you're, again, I just want to give you a couple snippets tonight, especially with recruiting, getting in the right mindset, intention, making sure that people understand that getting into the business, how do they make sure they're profitable in that business immediately and they're maximizing the business. Now I wanted to show you real quick, and you can get back with corporate. We're actually talking to them right now about providing this product. So it's the tax savings estimator, but it's on your phone. Now see, it's expanded out because it expands to whatever your screen is. So if you have an iPad, if you have a bigger screen or an iPhone or a Droid, it doesn't matter. This fits right within the screen. So you literally can be right in front of somebody, and let's say that they give you the money off. So, oh man, I'd love to do it, I just don't have the money. Well, great. Well, what if I show you that it's actually costing you money right now, or you're losing money right now by not being in a home-based business? Are you interested in maybe how much you might lose? Curiosity? Sure. Well, great. Well, and what we've done is we've auto-populated the averages, the nationwide average. So in home office, like a mortgage rent, the average is $1,550 or $18,600 annually. Okay, in business vehicle, it automatically populates $15,000. In business travel, $4,000. In meals and entertainment, automatically think that's $400 or $4,800 annually. Office, $200 or $2,400 annually. So I literally could just say to somebody, hey, here's the averages. If you want to change something, great. Again, you might be up a little higher, a little lower, or we can just keep it the same. All I do is calculate the savings. So right on my phone, I can actually show them. I'm showing right now that by joining the home-based business, you can start possibly saving about $484.63. That's about $5,800 per year. Hey, but I know that you probably have to talk to your husband or your wife about getting into this business. So let me save this report. And again, this is all right on your phone. So I would put your name right here, Eric Kenneth. I would put in your email address, so Eric at the extension tracker. I would put your mobile number, 566-7. Then I would put notes. So I would say, I'll remember that. Okay, so notes. This is great to just remind you of what did you talk to them about, or what did they get excited about, or what products would you show them that they really enjoyed. So I'll just put Eric loves this. I can get my computer and get the unit going here. Okay, so Eric, I'm just gonna, you know what? I'm just gonna keep right there. Your fingers running so slow. All right, so it's also got, so this would be your notes of whatever you spoke to them about. But what you also want to do is you want to provide a follow-up date. So I click in the follow-up date. Just creeping along. Tom and Ron, I'm trying to get through this so I can turn it over to you guys. But man, this thing is just creeping along. All right, so I would put in a date that I want to follow up with it. So let's say that it's tomorrow. And so the 8th, I would put in there the 8th. We want to take the time to go through it. All right, I'm going to switch it over. So in the date, when I put let's call it the 8th, and I send email, just bring it back to the same email. It's going to send them an email, and it's going to have a report tied to it. So in the report, it's going to look like this. So because typically somebody's got to talk to somebody, a husband or a wife, and say, hey, you know what? I didn't realize we were losing money. Check out this quick little brochure. So what we've got is the tax savings estimator. It has your name. And then second, it has the 2 tax systems. So we wanted to show them Bioaccountable Solutions. We wanted to show them there's 2 tax systems, one for employees and then one for self-employed entrepreneurs. And you get all these benefits and all these write-offs. The third is it actually shows their savings or what they're losing, estimated monthly tax savings or annual. And so we wanted to get it down to a number because people buy emotionally, they justify factually. So we wanted to justify it by numbers, give them the numbers, show them why it's a smart financial decision to be in CCM. You guys, you're already saving the money on electrical, gas, phone bills, all of those things. This is just gravy on top. You go, man, there's so many savings and you're losing money. It's a no-brainer. And we wanted to make it to a really simple to show them this. And then the last page is your contact information. You would upload your picture, you put in all of your information, and it sends it right to them. So there's going to be more information that corporate's going to have that you guys can go into the back office, and you can learn more about this tax savings estimator. phone app and make it to where as you're out and about, you've always got a solution. If anybody comes to you with a money obstacle, I just don't have the money, I just can't afford it right now, any of those types of things, hey, let's make sure that we walk through some of the numbers and help you understand that you're actually losing more than the business is going to cost you right now. And let me show that. All right, so I hope that I apologize for the internet being so slow, but I hope as far as the recruiting tools, retention, getting that CCM debit card tied in, we're going to have many more trainings very shortly. I want to keep doing it. I want to keep making sure that you guys are applying the tools and helping explode your business. All right, so now I'm going to have the pleasure to introduce Tom Bass and Rhonda Johnson. Again, talking more on the tax strategy of being in a home-based business. I talked a lot about the recruiting aspect of it and making sure that people understand why it's a smart financial decision to first of all have a home-based business and how to make sure that they can maximize it. So you really want to use Tom and Rhonda as your source, as for information at tax preparation time. They've got audit protection. So if you ever, audits are up, I think, what, 83 or 86%. You have audit protection that covers you for the year. So if in case you ever did get an audit, they help you make sure that you move right through it. All right, so let me change presenters. And I got my whole system that's slow. It is, I guess it isn't just the internet, it's the actual go to webinar. So Tom, are you ready as far as your screen?
I'm ready.
All right, now if I can just change presenters here, this would be great. All right, so let me stop showing screen and then move over and down to your name. All right, there you go. All right, Tom, you have the mic.
Well, good evening, everybody. We're really thrilled to be with you. Show my screen.
The computer, Tom. Yeah, let me know when the welcome screen's up there.
I believe it's there.
All right. Well, we want to thank everybody for being on the call tonight, and it certainly is a pleasure to work, obviously, with our partner Eric, and then with the company allowing us to talk to you. But it is tax time, and some of you are stressing out because you're not ready, and you'll wait till April 14th. We know those people are out there, and that's okay. Tom and I co-authored a book a couple of years ago, and its title is Making Tax a Game, Let's Play to Win. So Tom, you want to explain kind of our philosophy on why we're taking such a lackadaisical, so to speak, view of the taxes, because taxes are serious, we all know that, but are we making it a game? Can you explain the title of our book and our processes and our philosophy a little bit?
Well, actually, to think back on it, when we were all 4, 5, 6 years old, we started playing board games like Clue or Candyland or Monopoly, and then we moved on to competitive sports. And basically, in all those endeavors, you learn the rules and then you play the game, and nobody plays to lose. So the IRS has rules that it will stack up to the ceiling. Nobody really understands all of them. We really specialize in direct sales and all the law and the IRS rules that apply to direct sellers, and we just put the tag on there that we just play to win. We want to do things aggressively, but we want to stay within the guidelines from the from the IRS.
Our bottom line is we want to make you audit ready. We cannot make you audit proof because nobody can, but we can certainly tell you what it will take to make you audit ready if you should get that dreaded letter from the IRS. And that maybe is a negative way to approach it, but for us it's good business because we want you to work your business like a business so it'll pay like a business. And you can't ignore the business side of it, or otherwise you're really not getting all the benefits that you should by having your business. So it's a catch-22. So the right way to start a business. Tom, you want to go through those?
Well, basically, The only thing you're really required to do, as far as the IRS is concerned, is when you start a business, it's just a decision that you make, and then if your intent is to make a profit, then you're in business. We approach, the whole concept of having a business is just that that the universe and the world is one that's full of abundance, and there's plenty for everybody, and we don't necessarily think of ourselves as being in competition with other people doing the same thing we're doing, and we're really in competition with everyone that has something to sell, and because nobody except Donald Trump or people like that seem to have unlimited funds. We all have a limited amount, and so we have to make a lot of choices where we're going to spend the money. It's important to have a business plan. We have one on our website. We'll give you a link there at the end of the show. We have quite a few documents that you can download. When you actually get into the business, it's really important that you have a separate checking account, and basically you just want to have a separate personal checking account. Anytime we use the word checking or credit card, we're talking about personal. You don't want to tell the bank that you have to have a business account, because typically it's going to cost you more money. So you want to have a dedicated credit card as well. Just take one of your existing cards, or use your expense tracker card, or use your ATM card, the same with your bank account. And if you're not doing that, then just start tomorrow, because it's very important that you do that. That's the first question that comes up in an audit, is do they have a separate checking account? Because they're basically telling the auditor they're not serious about the business if you don't, if you're commingling the money. And it's pretty typical. We run into people all the time that even have significant amounts of income that commingle the money, because it just seems like that when you need to write a check, it's always in the other account. And what we want you to do is write the check from the right account and just transfer the money into even dollars, 100, 500, 1,000, whatever you need. And then it's also real important that you report all your income. It's illegal to not report the income, and the IRS tends to frown on that. When you have audits, that's really what they're looking for. One thing that Rhonda may talk about a little bit too is that you're going to gather a lot of receipts. We want you to keep them. We'll go into that in more detail as we get into the call.
Great.
Okay.
The next part is actually an audit. So we want to go to the next slide, Tom, and let's go through and kind of tell them. Okay, good. So let's go through and just kind of tell them what they would need should they have to go in an audit, which means these are the records you're going to keep regardless. Because you don't get an audit immediately. It's usually 3 years down the line. By then, I don't know about you on the call, but for me, I'd forget 3 years from now what I really did and why I did it. So that's why records are really important, because they want to know after the fact what you did with your business. So keep records.
Well, the best records to keep are your bank statements and your credit card statements, and you'll also want to keep the actual little receipts you get, but those we don't really want you doing your bookkeeping or your record keeping, so to speak, for your tax returns from the receipts themselves. And that's what most people tend to think. They want to keep all of the receipts, and we tell you to do that. Put them in a Ziploc bag, squish the air out of them, scan them, make copies of them, but just throw them in a brown envelope and save them for 3 years, and then you get audited, pull them out and match them up. But your records are really much better kept from the bank statements and the credit card statements, and normally those are good enough even in an audit. And basically in an audit, you just need to have as much documentation as you can. The canceled check or the credit card statement showing where you paid the bill. We also encourage people to prepare early and file late. The reason we do that is because most of the audits are selected, in the first quarter of the year, and if you file an extension to October 15th, then you're lessening the chance of getting audited. We also want you to prepare early, because if you owe money, then it's actually due April 15th, because the extension only extends filing the return, not paying the money. So that's just a little strategy. At least typically half of our clients file on October 15th. If you're real interested in getting the refund and it's very substantial, then obviously you may want to file early. Anytime you're corresponding with the IRS, you want to send it by registered mail. They're notorious for saying that, oh yeah, you sent us an envelope, but it was empty, and with a straight face. So you want to send it with registered mail, because at least you can prove that they actually received it. And almost everybody is required now to e-file, but if you're using a preparer that still does paper returns, you're really foolish, because the error rate's about 20%. It's less than 0.5% on an e-file return. Most of the errors and letters you get back from the IRS are basically from their staff keying in the wrong information. again, like I mentioned earlier, you want to pay the balance due by April 15th. You can always pay some money, even if it's more than you think your return's going to be, so that you'll not incur that late payment penalty, and you'll just get a refund back just as soon as you file the return. Like I said at the beginning, we really encourage you to use checks and credit cards and minimize cash. Don't use cash unless you have no choice.
The next one is the two tax systems, and Eric took this one pretty good throughout this talk, and it's really business and employee, the informed and the uninformed. But the reason I wanted to go over it again is because so many people are visual learners, and I think if you go through this with Tom and you're reading it, then it really will make more sense sometimes than just hearing it. So go ahead and do the two tax systems, Tom.
Well, in the simplest terms, we're all familiar with the employee or W-2. That's where most of us, start, or that's where most of you, are earning your income now. And if you think about it, you earn the income, they take the taxes out before you get the check, and then you hope that the month doesn't run out before the money does. And yet, if you have a business, you receive the income. You can buy just about anything, and it's going to be tax deductible, and then you only have to pay tax on what's left. And you might think, well, that doesn't seem quite like an even playing field. Well, it's not. And that's really our basic message is having a home-based business allows you to convert what are typically personal expenses, things you're going to spend money on anyway, like your cell phone and travel and all the things Eric mentioned in the tax savings estimator. And now you're going to be able to convert a percentage of that to business expenses. So, there's where the $400 or $500 a month that Eric was explaining, that tax savings comes in immediately.
Great, thanks. The next one is one of my favorites. It's one of our pop quiz cards, and it is, do you know which president doesn't have a ranch or a farm? And you know why? Because that's their home-based business. Now there is one, and he and she are both political figures. So the Clintons currently do not have a ranch or a farm, but they do have a winery. So they're kind of catching up with us a little bit behind everybody else. Everybody else had their ranch or a farm, and now the Clintons have their winery. But before that, there was an answer to that, and it was the Clintons that didn't. But they currently have a home business, which is what we're telling everybody. Because most of the senators' wives are lobbyists. The laws that we're telling you about that the IRS requires are not anything new. They've been in place since 1913, and they're not anything that's going to go away because everybody uses them. Tom, give them some history on it, why it was set up in 1913, why Congress gave us these rules to go by for home business. I think that's interesting.
Well, basically, that's when that was the second income tax that was set up, and they were trying to provide some incentive for people to start businesses. And if you think about it, almost everybody then had a home-based business, but they were all in agriculture on the farm or ranch. And so, since that was the majority of the taxpayers, it was just good policy to basically give them a break. And it's just stayed in the code ever since then. And like Rhonda said, virtually everybody in Congress, their spouse is a lobbyist, and so there's their home-based business. So
we're going to go on to our truths and myths. And if you just want to click all four of them, Tom, we'll just kind of hit them as a blanket so we can get through them a little bit faster.
They're there.
Okay, go ahead.
Well, you hear the term red flag quite a bit, and for years, Rhonda and I talked about that there weren't any red flags other than just doing something really stupid. It's like so many people use TurboTax now. You can put any number you want to in TurboTax. You can put extra zeros in there. You can beef up your refund, but you're asking for problems when you do that because the IRS is stupid and they actually have their computers scan and look for things that are just their anomalies where you're claiming things that are way out of reason for anybody else in your zip code, your income, and the profession that you're in. So if that's a red flag, then then obviously it's still there. But the type of things you typically hear where people tell you, well, you shouldn't have a home office, or if you have a Schedule C, you're likely to get audited. Well, that's very true. The audit percentage is a little bit higher, but if you're entitled to those deductions, they're part of the code. There's no reason not to take them. And quite frankly, in an audit, the auditors are puzzled if you have a Schedule C business you work from your home, why you're not claiming the home office. It's not a trigger. And we do a lot of audits, and it all turns into a negotiation at some point. And if you have the business and you're making money at it, or you're working hard to make money at it, well then you're entitled to take the deduction. And they don't quibble about that at all. One of the things you typically hear is you got to make a profit every 3 out of 5 years, or some figure like that, and it's absolutely not true. Amazon.com lost money for over a decade. They wrote it all off, hundreds of millions of dollars, and so there's no reason why you can't either. A lot of people tend to think it's a great deal to get a big refund, and when in reality, to me, that's the quintessential April Fool's joke, because you're basically getting excited about the government giving your own money back to you that they've used over a year for interest free.
Awesome. The next slide is your tax preparer a direct selling does he or she have direct selling savvy? And this is a real important one, because I think most of us are educated to believe that CPAs are typically our tax guru. And I have to tell you, I'm married to one of those guys, and it wasn't until Tom and I wrote the book and then he proofed it for us that he came and said, you know what, I didn't know what I didn't know, because CPAs are basically auditors, and they take a 16-hour exam and only 4 hours are on taxes, where we, our firm, are enrolled agents, and we take a 16-hour exam and 16 hours are on taxes. So just that alone, look at the difference that you have in just actual education. And then we're licensed by the IRS, so we can practice in all 50 states. CPAs are typically licensed in the state that they practice. So once they have to take a test wherever they go, and most of them don't want to take more than one, so they're only going to take it in their local state. Whereas we can work with anyone on your team, doesn't matter where you recruit them from, but we can help them. And we always believe that your taxes should be a process and not an event. If you don't have your current tax guy's phone number in your cell phone, then you don't have the right person. Because throughout the year, you're making decisions that by the end of the year will affect you. But if you're not getting help and advice along the way, then you have the wrong person. Like if you're going to buy a car, lease a car, you want to get with your tax guy and say, what's better for me? And be sure to have his number in your cell phone as you're sitting down to make the deal, so you know which is most lucrative for you. The next one I really love, and it's, Tom, go ahead and hit the next slide, and it's hiring your children. Children between the ages of 6 and 17. Go for it, Tom.
Okay. Basically, you can hire your children. You can pay them up to $5,700 a year tax-free. They can do anything that you would pay anyone else to do. It doesn't necessarily have to be related to the business, although they could do data entry or package products, or put, if you have products that you have to shelve, unpack, that sort of thing. You can pay them to do household chores, vacuuming, dust, babysitting the other kids, fixing meals, washing the car, maybe even picking up their room for a change. So instead of giving them allowance, you take that tax deduction. You're going to get potentially another $2,000 in extra refund. So you get the deduction for the business; it's tax-free to them, and it just helps your your business. And that's for kids from 6 to 17. And if you got more kids, then it's just more deduction. I'm going to skip to the next one, which is about the self-insured medical plan. This is one of the things that is really one that's really overlooked. The employing your kids is one that very few people take advantage of. The other thing is that if you have high medical and you're doing your own tax returns now, you realize that on Schedule A you have to exceed 7.5% of your income. In other words, if you make $100,000, you have to have $7,500 in medical before you can even deduct the next dollar. But there's a way to make all of your medical, and even medical that wouldn't necessarily be covered by the typical medical insurance, deductible. And that's very simple. You just hire your spouse, the one that doesn't have the Schedule C business, which is typically the husband. You pay him $50, $100 a month on a regular payroll, and now you set up a medical reimbursement plan for your employees. And because you're married to him, then you automatically have your, all of your medical related bills, they're tax deductible. So what you really do is just the business presents, the individual takes the bills from the personal account, presents that bill to the business reimburses them, and you put the money right back into the checking account it came out to start with, and now, lo and behold, all your medical is deductible. And that can even be if you have insurance at work. Now, any of your co-pays or any deductibles you have to pay, it all ends up being deductible. That's a big plus.
Yeah, the premiums are even deductible. Whoever carries those, I think that's just outstanding. Little pieces of information to know and be able to have. And if the children, are part of your business and they're on the payroll, then this is something that you offer all your employees, as long as it's just your family, your immediate family. And once you get big enough that you're going to have outside help, outside payroll that you're going to bring in, then you don't want to offer this benefit anymore, because then you would include paying medical reimbursement to your employees too. But as long as it's husband and children, then that covers them all. So it doesn't matter if it's braces or whatever it is. That's the other reason to keep the kids and the family involved in your business. And it's much better when everybody's involved, because there's a genuine family interest in growing and being a part of this, and everybody working the business, rather than, anybody being resentful because you're on the phone or you're away. It just makes it easier to go.
Something I like to throw in here too is it seems like kids always have an unlimited list of things they want you to spend money on when they're spending your money. But if you start telling them, okay, you want to buy a new Xbox or a new game or whatever, I'll pay half and you pay half. And you'd be surprised how many times the kids will say, oh, I'd rather leave the money in the bank. I don't really need it that bad. That's good one.
Yeah, exactly. They don't want to pay the money, but as long as you're willing to, boy, they're all for it. The next one is for mileage reimbursement. And from this point on, if you don't like what Tom and I are saying and you just really want to hang up the phone and say, okay, I'm done for the night, well, then I want you to know if you're not going to take this next part at all, from this moment on, for every 2 miles you drive, you throw $1 out the window for the rest of the year, because that's basically what you're going to be doing. You want to add anything to the mileage, Tom? Building your business where you want to?
Well, basically, the one little tip we like to throw out is that since you have a home-based business, you just need to make the mental decision that is your primary source of income, that your office is home is your primary office, and then the IRS has a rule called the 2-office rule, and if you have a W-2 job and you work for a company that has multiple offices, it's commuting when you drive to the first office, but during the day, if you go to the second office, that is a business trip, and then it's a commute on the way home. You might, our little tip is basically if your primary business is at home, if the first stop when you leave the house relates to business and the last stop on the way home relates to business, then it really doesn't matter what you do in between, even if you're taking kids to, soccer or some family-related activity like that, then what it basically does, it makes the whole day a business trip rather than a commute. You might throw in what you typically tell people at this point too, Rhonda.
It goes back to intent. So if I'm starting out in the morning, my first stop could be the post office, or it could be Office Depot, or it could be Starbucks. And I'm going to go in to get my latte. But you know what? I'm not going in there for a latte. I'm going in there with the intent to make a connection for my business. I'm going in there with a business intent. And by the way, while I'm in there, I'm going to buy my latte, but that's not my intent in going in there. I want to make that connection. Same thing at the end of the day. Maybe I need to pick up something for dinner or for home, and I'm going to go into the supermarket. But you know what? I'm going in with the intent that I'm going to meet someone else with regards to my business. I'm going to be able to talk to someone about a product, about representation, about something about my business, to get them into my business and get them excited that they ran into me at the supermarket. So I'm not in there to pick up the milk or the chicken. I'm in there to make a contact. And we all know this is a numbers thing. So the more you put yourself in those places to meet people with that intent that you're going to do that, and the more often it's going to happen. I gave this to a challenge at an event once when I was the speaker, and their recruiting went up almost 35% in the next month. And that was just because people were intentionally shopping with the intent of making a contact, not just walking in and picking up their coffee, but making sure that they spoke to someone while they were in there to make that time worthwhile. So it's once again that intent to make a profit, intent. So the next slide is go to the IRS. You can go, Tom.
No, it's vacation.
IRS, Tom.
No, it's never take another vacation. Basically, what you want to do is build your business where you want to travel. You know, if your mom lives on the other side of the country and you go there once or twice a year, then build a team there. If you like to go to Hawaii or you like to go to Florida, then build a team there so that is your reason. And it gets back to just like what we were talking about with mileage, is the intent. If that's the intent of your trip, then it's very easy to turn it into a business trip and make it totally deductible. These are the basic reasons. The IRS rules as it relates to vacations or trips rather are a little more involved, but basically if you're spending 4 hours and 1 minute a day on business and you do that on Friday and Monday, then Saturday and Sunday is part of the business trip too. So there's ways to stay within the rules and yet make virtually everything you do tax deductible. The next one you need to talk about, Rhonda, because this is you and George.
Yeah, this is like, we all have a fantasy, and taxes don't give you a whole lot of funky fantasies. So when we were writing the book, I was at an event, and I was out of town, and I called Tom, and I go, you know what, I'm getting a lot of spouses coming tonight, and I need something that absolutely shows them the difference between having a home business and not having a business. So go ahead and tell them how you rescued me. And we just happened to use George and Rhonda Clooney because that was my fantasy. I mean, George and I on the same tax return have said, hey, we have something going. So it's even in my head.
She called me about 3:30 on the afternoon that she was going to have a meeting at 6 o'clock and said, I need something that you can fax to me that I can print and let the husbands take home with them. And these are typically the ones we call the dream stealer because we've been going up there for years, and Rhonda would talk to all these ladies in the back of, Denny's or someplace like that, and ladies get all excited about all these, new things that they do. They want to take advantage of on their taxes. They go home and share it with their husband, and he tends to say, "Oh, honey, what do you know about that?" Or, we've been using the same CPA for years, or we always go to H&R Block, or, I'm an engineer, I just do it myself on TurboTax. And one way or another, she gets put down, and they don't end up with the tax savings. So what I do is I just took a typical family in California, husband and wife, 2 kids. They made $99,000, all W-2 between them. They owned their house. Their tax was $8,189. So I just took the same tax return, and I said, okay, let's make the wife, in this case Rhonda, she had started a new home-based business. She gave up her W-2 job. She made the same $27,000 in income, but when we put in the typical expenses, and I didn't, exaggerate it, I just put in what, was normal. So what it came out, the bottom line is they got an extra $4,315 on the same amount of income. Well, that's the dramatic part that you need to share with people that, that you can do through the tax savings estimator, because basically you save that money as soon as you even think about joining, even if you haven't sold anything, because you're going to get that in additional refund at the end of the year. So what we're encouraging you to do is go change your W-4 at work, get that raised now, and that's where the $400, $500, $600 a month that Eric talks about comes from, is from the tax savings in your existing W-2 job.
And so many of these expenses are your everyday expenses that you're going to have no matter what. You're going to have mortgage or rent. You're going to have telephone. You're going to have internet. You're just going to have all of these things anyway. You're going to drive your car regardless. So it's like, what about business mileage? It's everyday things that you're doing. We're not asking you to step outside the box and do more. We're already all on overload. So this is what you already do. And I find that fascinating that more people don't understand they need to do something else. This home business is really your key. And it's the only way that we can save in the current tax law.
Well, one thing that Eric often points out from his talks is that statistically, I forget the percentage, but it's, 70–80% of the people that declare bankruptcy would not have had to do that if they had an extra $300 a month. And you're providing that, and yet bankruptcies were higher last year than they've been, and they're anticipated to be even higher this year. So, you've got jobs to offer. Go help save some people from bankruptcy.
Yes, just an extra $300 would eliminate 70% of all bankruptcies.
That's pretty phenomenal. Okay, go to IRS now.
Now we're gonna send you to the IRS.
What we really want to share with you is that you may have heard the old, wise tale or whatever it is, the saying that, the attorney that represents himself is a fool for a client. Well, basically that's where you are if you go talk to the IRS by yourself, because they will basically, if you ever watched any of the old Columbo shows, and he's in there in his, his wrinkled up overcoat, and he's interviewing the top suspect, and then he just turns around to leave, and just as he opens the door, he turns around and says, I got one more question. And if that guy answers that question, he just, he's guilty. And that's really the way the IRS, they're real nice to you. They ask you really simple questions. You think you're being real helpful, and you're just digging a hole for yourself. You really have to know, what they're really asking, how to answer the questions, and, get somebody like us that's, that's, not intimidated by the IRS, that basically understands taxes, accounting, and all the, how they all integrate together much better than the auditors do, just because of their age and experience. And because the federal government's broke, most of the states are broke, they are really on the warpath to beat people up to get more money out of. And if you live in California, we can tell you some harrowing stories about how intense they are in just trying to get money that that they're not necessarily even entitled to. But they're both the state and the feds are all hiring more auditors, and they're just doing everything they can to ramp up the collection. And you couple that with the fact that a lot of people's income is down, or they don't have a job, or they lost their house. It really is it's a real serious situation just to try to get yourself out of. Do you want to add anything, Ron?
Yeah, I just wanted to tell the listeners, besides having this tax business, Tom and I have both been in direct sales for many years. In fact, together we have a total of 100 years. Of course, I'm a youngster, and so he's got the majority of that 100. But you know what? And so we've worked with a lot of companies, and we've learned the pay plans, we've learned how to do it. And so when we go in to teach you about taxes and your record keeping, we're coming at it from a whole different place than most people, because we understand it. We walk the walk and we talk the talk. We've been there. We've been in companies that we didn't make any money. We've been in companies that shut down overnight. We've been in companies where we were at the top of the company. I mean, it's just, we've got lots of tales to tell you. And a lot of our friends that are currently in our lives have come through those companies, and we've come down to them for years. So it's an incredible profession to be a part of. And the anatomy of an audit. You can tell them a little bit about the auditors, because I think most people think that there's rules and regulations, and there's step 1, 2, and 3 to an audit, when in fact you should really explain to them that, it's really the personality.
It really comes down to basically me, in my opinion, that basically anything that you've deducted is a legitimate business expense, and the auditor determining whether he would agree with me or not. And a lot of it really comes down to a negotiation, because there's obviously not time to go into a lot of stories with you, but there's so many times that I've had limited or virtually no expenses, and yet we come to the audit and they would accept everything, because to me the biggest part of the audit is just explain to them what your life is like, what it takes to be successful in direct sales. I'll tell you one little quick story. I had a client from Seattle call. He's actually in a cosmetic company that's probably 90% of the people in there are ladies, but he's a really young, good-looking guy, and he likes to work with ladies and sell cosmetics. And he was getting audited. He tried to handle the initial part of it himself. He called me up one day. He was our client. We were doing his taxes. He called me up and said, this isn't going well. I need you to take over for me. Just one little example out of there. He was earning about $150,000 a year. he had taken a 10-day trip to Hawaii with his family. He'd taken a 7 or 8 day vacation to the Mexican Riviera with his family, and he'd gone to the company convention. And the auditors asking me about all these trips. And basically, I went through a long explanation with her, but what I told her was, I said, do you have any idea how much time it takes and how difficult it is to earn $150,000 a year selling what he's selling? And I guarantee you, if he's sitting at the pool on a lounge chair and there's a lady next to him, she's getting a facial. This guy sells wherever he goes. The stewardess probably got the product before they got off the plane. I mean, everybody that he comes in contact with, within a couple of feet, they're not gonna walk away without knowing what he does. And basically, that auditor didn't disallow any of those things, which basically they were vacations, from, really strictly speaking. But they accepted everything just because we have a really good story to tell them, and they go along with it because it makes sense. Man, you've got to do that in order to earn that kind of money.
Well, and it's not like a story, like a fairy tale story. It's a story, that has some meaning and some belief because there's real people involved.
No, and that's true. And but it's really just laying the groundwork so that they understand, what the type of expenses to anticipate, the type of things they're going to see. Because I basically am telling them what they're going to see before they actually see it, so that when they see the expenses, they'll already realize, oh, well, I was expecting to see that, so they're not going to question it. And one reason we tell you to keep really good records is if you have good records for all the money you spend, there's not very much that is going to get taken away, if anything. It's the people that don't come out good on audits are the ones that have no records at all. And then it's a little harder to fight for them. And most of our returns, most of the audits we get are referred from, other preparers or from clients all over the country that know we have a reputation of, being, having a really good track record with the IRS. And we get along with them. We treat them like people, and we're nice to them, and they tend to reciprocate. It pays off really well. Okay.
The next slide is the jackpot, 6,000 in refunds, the 3 years amended returns.
Yeah, you can do that. You can go back 3 years, and we typically do that for a lot of clients. I'm too aggressive and dishonest now, Rhonda. You want to do that kind of quick, and we'll.
Yeah, well, I just wanted to tell a quick story with that other one.
Okay.
I have a very dear friend that lives up in Washington State, and I met her at an event, and I kept saying, what? Why don't you just let us look at your returns? Why don't you just see, make sure so you can learn more about what I do? And for a couple of years, she put me off, and finally she decided she would let us look at her returns because she had this great CPA. She knew he was taking good care of her. And she's been a pretty substantial networker, so her businesses were always great and profitable. So we finally got her returns in. She happened to live in Washington State. We got her returns in, and we were having a heck of a time getting her to call us back because we had a couple of questions. So finally, Tom had to send her, and this was in the good old days, because it was a fax. He had to send her a fax and say, I can tell you how to make $14,000 in the next 3 minutes. Will you call me? And she called right away, and that's the end of that story. It was $14,000 over the last 3 years that we were able to get back for her in money that was just left on the table by that CPA that was doing such a great job for her. So consequently, she's one of our biggest advocates out there.
I'm going to kind of, I think we can just cruise through the aggressive and dishonest. We are very aggressive. We think that if there's any doubt when you're spending money, we want you to make a decision to use the business card or the business check or personal card or personal check. Make a decision when you're spending the money. If there's any doubt in your mind, pick business. We'd rather you fudge a little bit on the expenses than not. We can, as Ron said, we can remand up to 3 years returns. Typically, there's money on the table. If you're still in doubt.
That was my scenario that I threw in a couple of minutes ago about throwing the $2 out the window for every 2 miles that you're driving. Because at the very least, your mileage should be one of the easiest things for you to say, you know what, I haven't claimed mileage. I probably drive X amount of miles a year, which is what Eric went through with the estimator also.
Okay, now we're down to the end.
Yep.
Okay.
Don't you love this? Yeah. So I was doodling one day, and I'm sure someone else thought this up, but as you're watching it on the screen, isn't that hysterical that the IRS is theirs? Do you think our forefathers really thought about that before they called it the IRS? I don't know, I find it funny. And then the other part is just many happy returns. You know, I look forward to hearing from most of you, you know, and usually if you get to meet us live, my music is helping Rhonda. So if you run into problems and you can't remember and you go, oh, who are those people? I need to call them. You remember the song, Help Me Rhonda, and that'll help you kind of go back and figure out who we were and how to reach us through the back room. So I appreciate your time. I know every evening is valuable to every person, so we really appreciate the opportunity and time. Thank you, Eric. Thanks, Bill.
Pleasure. Thank you, Tom and Rhonda, for being on. Really appreciate you guys spending the time to educate everybody, all of the CPM brokers, the ins and outs. As I said from the very beginning, it's all about information. And it's all about having the right kind of information, but really arming yourself, making sure that you're running this business and maximizing each and every component of the business. So, Bill, I wanted in the back office, we're going to have a link where with Tom and Rhonda, where you're able to contact them. If you need tax preparation, you want somebody, again, that understands the business, understands how to maximize the business. Like Dave mentioned, I've heard many stories where they can go back 3 years and do an audit and look at that you are taking each of the different components that you can. And so we'll have all of that where you see on their screen where you can contact them directly. And Bill, I'll turn it right back over to you.
Okay, thank you, Eric. Boy, I'll tell you, as I listened to that and looked at all those things, I thought I did a pretty darn good job. I hired my kids. I've written off a lot of different things, but I think I've probably paid way too much money over the last 5 years. And when I see theirs, the IRS, that appalls me. It really does, because it's not theirs, it's mine. Yours, right? So people, we've got the tools to grow your business, and then we've got some incredible tools to help you literally keep as much of the tax money as you possibly can. So take advantage of it. Go to that site. We'll have it in the back office, the link. So I appreciate you, Tom and Rhonda. Always enjoyable watching you guys. Presentations, and I just hope people really don't let that spouse talk you out of it, because that thing is just too powerful, too much money there. And so again, thank you, Eric. And you know what? You've got this in a recording. Once you've got that, you could zip that over to us, Eric. We'll put that back up in our training. People can watch it. All the people that missed it, and they can watch it. Okay?
Excellent.
Thanks,
you,
guys.
everyone. Really
Bye-bye.
appreciate it.
Thank you.
Have a good night. Bye-bye.
The organizer has ended the session, and this call will be disconnected. Goodbye.